my favorite things to do, which honestly makes me sound like a complete finance nerd, is play around with compound interest calculators. Because watching small amounts of money grow over time completely changed how I think about investing. Most people think investing is only for rich people, but honestly, the biggest advantage usually isn't having more money, it's starting earlier. Now, let me show you here what I mean. If someone invested just $200 a month starting at age 22 and kept doing that consistently until retirement, they could end up with over $1 million. And that is why I'm obsessed with this stuff. The magic isn't investing huge amounts, it's in giving your money time to grow. Now, a lot of people avoid investing because they think, I don't have money, or I have no idea where to start. Or honestly, they think investing sounds complicated or intimidating. And well, I get it. A lot of investing advice online makes it way more confusing than it needs to be. But here's the truth. Most people don't avoid investing because they can't do it. They avoid it because nobody explained it simply to them. And once you understand the basics, it's actually not that complicated. Now, at its core, investing is basically buying tiny pieces of businesses, and that's it. And over time, as those businesses start to grow, your money grows too. So you're basically letting your money work while you sleep. And no, you do not need to become a stock market expert. You do not need to stare at charts all day, and you certainly do not need to day trade. Honestly, simple usually wins when it comes to investing. Now, let's go back to that calculator for just a second, because this is the part that really matters. Let's say two people both invest the exact same amount every month. Same investments, same percentage of return. The only difference, one starts at the age 22. The other waits until they are 32. Now that 10-year difference can literally cost someone hundreds of thousands of dollars. And that is why starting early matters so much. Time matters more than talent in investing. And honestly, that should feel encouraging because it means you do not need to be perfect. You just need to start. Personally, I like to keep my investing simple. Index funds, long-term investing, and automatic investing. That's pretty much it. I'm not trying to beat the market. I'm not trying to become a millionaire overnight. And I'm definitely not trying to turn investing into a second full-time job. Because boring investing usually wins. And honestly, that's kind of good news because you do not need to become a stock market genius to build wealth. Anybody can do it. But one of the easiest ways to invest consistently is to stop relying on motivation. Simply automate it. Set up reoccurring investments and let it happen in the background. Because small amounts invested consistently over time matter way more than random bursts of motivation. Oh, it's a Tuesday, let me invest. No. The less emotional you make investing, usually the better. Now here are a quick few things not to do. Don't panic every time the market drops. Don't chase trends. Don't wait for the perfect time to invest. Because honestly, people spend years waiting to feel ready, while time quietly passes them by. If somebody online is yelling about a guaranteed investment opportunity, maybe run. Simple and consistent beats flashy almost every time. Now, my friend, here's your challenge. Go find a compound interest calculator. I'll leave my favorite in the description box. Seriously, do this. Type in small amounts, maybe $25 a month, $50, $100, and see what happens over time. Because even small amounts can grow into something life-changing. So, at the end of the day, you do not need to be rich to start investing. You do not need to know everything. You just need to begin. because your future self will never be upset that you started investing too early. Now, if you want to be the boss of your money, hit that subscribe button right below and share this with someone who thinks investing is only for rich people.